We are looking at the politics of plummeting global oil prices. And I have here in the studio with me the CEO International Energy Services Limited, Dr. Diran Fawibe. Good morning, Dr. Fawibe.
Good morning.
Am I not great to have dragged you to this place?
It's wonderful.
It's usually difficult.
No, it's the first time I'm coming to your studio here.
Yeah,
You know,
interesting.
I used to be at your Maryland studio before, but this one is it's quite nice.
Yeah, thank you very much. Well, we have seen the level the oil price has, gotten to now. As at this morning, it was at the Brent was at 46. The U.S. oil was at 45. How far do you think this will go? Really, are we going to have kind of an equilibrium, maybe at $40, perhaps?
Well, it's hard to say because you remember what Saudi Arabia said the minutes after the last OPEC conference, that they will be prepared to keep the output going until probably, if ever the price goes down to $20 per barrel. That's a significant statement, and sends signals to the international market, which in effect means that there will be a free fall of price, and that's what we'll be seeing. Nobody can say for sure where the price will will bottom out, and what we'll need to see in the next couple of weeks. But it's law of gravity. What goes up will come down, and also it will go up. So we are seeing what is happening now, and the unfortunate thing is that nobody seems to be doing anything, at least from the side of OPEC. As it's happened in the past, whenever there is a free fall in the price of oil, like we witnessed in 2009, usually OPEC tend to meet and discuss what to do about the plummeting of the price. But there are new dynamics in the international business that doesn't make it easy for OPEC to act unilaterally. OPEC, when it's dominant in the market, member countries could gather together and then agree on a cutback in production. And that was when there were no significant suppliers in the market. Currently, we have a U.S. that used to be a major net importer, now beginning to export. We have Russia that used to cooperate with OPEC at times. The current situation Russia is facing doesn't make for close collaboration and discussion. Russia is facing sanctions from the West. And Russia is not in the mood now to sit down with anybody because the sanction is having its toll on the Russian economy. And it's also political. The attitude of Russia towards the West, towards anybody, and they have to rake up whatever they could get from the international export of petroleum products. So that is part of what is happening. Now, U.S. is now relenting, for self-interest purposes, and we can understand this. So as long as this interplay of forces are there, OPEC cannot unilaterally, say, I want to cut back production. But then, there's no way OPEC and these other countries will not have to sit down at a point in time.
No, but there are indications that they will probably have to meet, because I think their next scheduled meeting is in June. Is there any possibility that they would, have to meet?
Well, I wouldn't expect that, the next conference will be in June. I expect there could be extraordinary conference, sometime, probably not in January, certainly. Maybe not in February, but probably in March. And that is where, our minister, who is now the OPEC president, will have to play a role.
Yeah.
I guess that currently there will be some consultation going on. At least there are a few member countries that are not happy with what is happening now. Iran, for example, is a major force in saying that OPEC had to cut back production. Saudi Arabia, or the Gulf countries, Saudi Arabia, United Arab Emirates, and of course Kuwait, they are no longer looking at production cutback. And they have come out to say that they are not going to lose their own share of the market. But you see, if people are now saying share of the market, Nigeria has got share of the market, and just as Gulf countries, when we compare Nigeria and some other, compare Saudi Arabia with some other OPEC countries, they don't need as much money, revenue, as we do, say in Nigeria, Algeria, Venezuela, and some other smaller, producing countries. But when you now look at what is happening in United States, looking at what is happening with respect to Russia, of course, Saudi Arabia will take the stand that is currently having that say that I'm not going to cut back production. But more importantly, Saudi Arabia is trimming down prices in Europe and United States. It's like when you are doing a war, you first of all look at the areas where you have some influence and you can easily attack before you go to the major conk areas. And what I mean by this, when we look at the international market, Saudi Arabia, Middle East is closer to China, to Asia. India, China, and to some extent, Japan. That is in the past, Gulf cruise used to go majorly to these regions. Now, Saudi Arabia is competing with African producers in United States and Europe. And of course, United States, when it used to import Nigerian crude, because of the demand for gasoline, their demand used to be for light sweet crude, the type of which Nigeria produces, Libya and Algeria. And the refinery configuration tends to process light crude. And the quality specifications in U.S., to a lesser extent in Europe, favor sweet crude. But now things have changed. The differentials between light crude and heavy crude of the Middle East tend to favor African producers, because the Saudi crude is about 1.8% sulfur content, even though it may be at 34 degrees API, whereas Nigerian crude, Bonnet, that is about 34 degrees API, has about 0.3% sulfur. And that is what is happening, that the differentials, for Nigerian, for Saudi Arabia, they are now trimming it down to make the price more favorable, for Saudi crude.
Okay, now where does that leave Nigeria, considering the fact that U.S. perhaps have stopped, buying Nigerian oil, and there are other markets Nigeria can actually explore?
Well, I guess that is what Nigeria is currently looking at. The markets that Nigeria can explore are obvious. Asian market, that's China, India. Currently, the import of China is in the neighborhood of 10 million barrels per day, whereas India is about 3.6 million barrels per day. Now, if we are exporting, say, about 1.5 million barrels per day, Nigerian crude can have outlet in those areas, irrespective, notwithstanding the distance. Because in the past, when we used to push a lot of Nigerian oil to Europe and United States, we tend to feel that Asia is too far. And most of the crudes, Nigerian crudes, being bought at that time, used to be swapped in Europe.
No, but how competitive are we going to be with other countries?
Yes, you have whatever you can get for your crude. Obviously, when you compare to Europe or United States, Nigeria has to suffer price differential, if your crude is going to Asia. But at least it represents an outlet for you. And that is where Nigerian crude can go. But we are not going to take this for granted for too long, because if anybody about 6 years ago said that Nigerian oil will not go to the United States, you say, no, forget it. But now it has happened. The same thing could happen in Asia, in the years to come. So that is why Nigerians now have to think strategically what you can do to stop exporting crude oil. And what you can do in this respect will be process some proportion of your crude in Nigeria, sell locally, and sell abroad. And I've said this in the past. What Middle East countries used to do in the past is to buy shares, equity in the refineries in Europe or even in Latin America. So it provides an outlet. If I take, say, 25% equity in a refinery in Europe, of course, I have some influence to say that buy crude oil from this particular country. It now provides an outlet. So Nigeria may have to think along that line, if it is not too late. Although,
but our refineries are not working.
well, that is one other aspect. If we are importing, say, 400,000 barrels per day of Nigeria of petroleum products into this country, if we are refining, that amount of volume of crude oil, it represents a deduction for what we are currently exporting. So, which in effect means that if our refineries are working, and we've said too much about the current refineries, how we can work on them to make them, rehabilitate them, to make them to be able to refine. But we know that the only way out will probably be setting up new refineries. May God bless this country with more adequate Dangote that can set up refineries, not just Dangote refinery only, additional ones that can process Nigerian crude so that we depend less on exporting crude oil. That may be the solution in the long term. It doesn't mean that there won't be challenges when it comes to exporting petroleum products, but at least we'll be able to satisfy local demand first, and we can make money out of this. If Nigeria is refining about 700,000 barrels per day, that would be a big chunk coming out of what we traditionally used to export in the form of crude oil. But then we have to even stop importing petroleum products, which may not happen until another 4 years. Because if Dangote refinery its construction starts now, as it's tending to be, the refinery may not come on stream to take significant quantity of Nigeria oil until about 3 and 4 years, which means that we shall continue to import petroleum products. That is a major challenge in the current situation.